In today's video, we're going to show you how we use swing trading to our advantage, especially when market conditions are a little bit tricky and we have to deal with a potential earnings report. And a good example of that is our recent trading in LNKD LinkedIn. After selling off along with the market in October and bottoming out in mid-November, LinkedIn finally reclaimed the 200-day moving average around 11/19 of 2012. That was the first sign that the potential downtrend was over in LinkedIn. At that point, we started to watch it closely. Now, we noticed that the price action here made a higher low and that the action was tightening up, as you can see here with this tight price range. And as the price action broke out again, LinkedIn formed another tight range here above 112. And this is the range we're looking at as a potential handle, a sort of cup and handle pattern here. We also note that the 20-day moving average is now back above the 50-day while it's forming the handle here in late December. After a few weeks of chopping around and undercutting the lows here, the price action finally set up for a potential buy entry on the reversal bar on January 8th. The 113 area, the prior day's high, is what we're looking for as an entry. And the next day it triggered, and the very next day it gapped higher and broke out on a big pickup in volume. As you can see down here, volume on 110 breakout was very strong. Now, since LinkedIn was scheduled to report earnings in early February, we wanted to capture as much upside as we could in LinkedIn without having to sit through a pullback that potentially could lead into earnings. So as LinkedIn surged higher, we set a very tight trailing stop on 129 here, where we're stopped out at 125.89 on 129. So this is basically where we exited the position, and we locked in a decent advance there of about 11% from our buy entry down around 113. So LinkedIn chopped around for the next few days as it approached its earnings report. And just before LinkedIn was scheduled to report earnings on February 8th, the price action got a bit volatile here on the 7th as people were nervous about the report. Some wanted out, maybe some wanted in. What we decided to do, and we gave to our subscribers, was if LinkedIn had a powerful reaction to earnings and gapped higher on the open, we wanted to buy the gap up right on the open. We instructed our clients to buy LinkedIn on any open that was greater than $128. And the very next day, LinkedIn opened at 140, where we bought at the open, and we held over the next few days as LinkedIn pushed higher, and we finally sold on 221 at 157.20 here on the open. As the market flashed some heavy signs of distribution, it flashed its fourth day of heavy selling distribution, so our market timing model produced a sell signal, and we're out with about a 11% gain. To recap, we initially bought LNKD at 113 and sold around 125 for about 11% gain, and then we bought back in on the open on the monster gap up and sold on 221 for another 11% gain. The reason why we bought LinkedIn on the gap up from earnings was based on models that we've had in the past of prior big winners, namely RIM in 2007 when it formed a breakaway gap up from earnings. So as you can see, done correctly, swing trading allows you to tiptoe around the market during critical times such as earnings season. Thank you for joining us today, and good luck with your trading.